Welcome to The Explainer. Today, we're unpacking one of the most absolutely crucial, yet somehow entirely invisible forces behind the digital world you and I interact with every single day. We're talking about Equinix. Now, if you've been paying even a little bit of attention to the markets lately, you know artificial intelligence is driving some massive tech shifts. But here's the thing, AI doesn't just magically live up in the ether. It lives in highly specialized, very real physical infrastructure. So let's dive right in and explore the undisputed giant of AI data centers.
Right off the bat, this is the fundamental question we have to answer. During this massive cloud and AI gold rush we're in the middle of, who is actually building and, more importantly, profiting from the shovels? You know, the software and the flashy chips, they get all the headlines, but absolutely none of it works without the physical plumbing. Who owns the vast hyper-connected warehouses where these digital brains actually do their thinking? Well, for a huge chunk of the global market, the answer is Equinix.
Section 1. The Internet's meeting point.
Okay, what's really fascinating here is this concept of the IBX, or International Business Exchange. See, Equinix doesn't just act like a landlord renting out some basic server space. Instead, think of an IBX data center as the ultimate neutral VIP meeting room for the entire internet. It's the literal, physical location where the biggest tech players on the planet, we're talking your Amazons, your Microsofts, your Googles, where they literally plug their networks into each other. They shake hands through direct physical cables, which the industry calls interconnection.
280. That's how many of these massive data center facilities Equinix operates right now, and they're spread across 36 different countries. It's so incredibly important to ground these abstract concepts like the cloud or AI into this physical reality. They've built this incredibly expansive global footprint that handles the absolute most critical digital infrastructure in the world.
Section 2. Q2 2026 Financial Highlights.
So let's talk numbers, because Equinix completely outpaced Wall Street's expectations in the second quarter. They brought in $2.625 billion in revenue. That's a 16% jump year over year, and it beat expectations by roughly $30 million. Earnings per share hit $4.83, easily clearing the $4.67 that everyone was expecting. And beyond just those headline numbers, a really critical metric for this kind of business is adjusted EBITDA, and that reached a record $1.396 billion. Guys, they are operating with incredibly high margins of 53%. That's huge.
But here's the crucial metric you really need to understand: 9,700. That is the record number of net interconnections Equinix added in just that one single quarter. Remember how we just talked about those physical handshakes between networks? Well, those interconnections are Equinix's highest margin, absolute most valuable service. So hitting 9,700 flat out proves that demand for direct, high-speed connection is absolutely skyrocketing right now.
And because of these stellar results, management is practically throwing down the gauntlet. They didn't just raise their guidance for the rest of 2026. No, they raised their long-term guidance well above what they previously expected. They're now projecting 10% to 13% annual revenue growth all the way through 2029. Let me tell you, that is a massive, massive signal of internal confidence in their multi-year pipeline.
Section 3. Wall Street's Verdict.
Now, it's no surprise that there is just a sheer dominance of bullish sentiment surrounding this company. Out of 32 analysts polled by S&P Global, look at what's totally missing. 0 sell ratings. Literally none. You've got 21 strong buys, 5 buys, and only 6 holds. I have to say, it's incredibly rare to see this level of unified, overwhelming optimism from institutional analysts.
And here's how that sentiment is actually playing out for the stock as of late August 2026. The stock is trading at $1,073.44, which is hovering right near the top of its 52-week range. But analysts, they still see significant runway ahead, with an average target of $1,235, which implies another 15% upside. HSBC actually has the most bullish target out there at $1,400. Plus, institutional ownership is nearly 100%. That means the smart money, BlackRock, the pension funds, mutual funds, they are locking up virtually every available share. If you're tracking institutional confidence, honestly, this is as loud a signal as you're ever going to get.
Section 4. The AI Power Play.
So, why the explosion in growth? Well, artificial intelligence requires extraordinarily dense computing power, and those standard air-conditioned server rooms, yeah, they just don't cut it anymore. Take their newly opened HK6 facility in Hong Kong, for example. That's a $124 million initial investment, and it's specifically equipped with advanced liquid cooling technology designed just to handle those high-density AI workloads. They are investing heavily into these specialized, future-proof facilities to meet these surging AI demands head-on.
And this brings us to how they've had to reshape their whole strategy. It's actually beautifully ironic when you think about it. The most advanced AI on the planet is currently bottlenecked by the most basic utility we have, electricity. It's forced Equinix to completely flip their traditional expansion model on its head into what they call a power-first strategy. Today's step one is securing the power, which alone can cost tens of millions. Only if they get the power secured do they move to step two, which is purchasing the land, and then finally step three, actually building the thing.
To meet this immense demand, Equinix is ramping up capital spending to between $5 and $7 billion. They've got 52 publicly announced projects underway right now across 33 different markets, with another 50 just in the planning phase. And to address that massive power demand sustainably, they're being incredibly proactive. Just as an example, a recent power purchase agreement in Singapore ensures their renewable energy portfolio over there is going to reach 215 megawatts peak by 2028.
Section 5. Real risks and roadblocks.
All right, let's just let that number sit there for a second. 67.9 times. This is Equinix's trailing price-to-earnings ratio. It perfectly emphasizes the steep price of admission if you want to own a piece of this infrastructure today.
When we actually contextualize that 67.9x ratio against the broader market, the premium becomes glaringly obvious. The average real estate investment trust trades at a multiple of about 26x. Equinix is demanding a massive premium compared to that. In fact, these exact valuation concerns are what prompted Scotiabank to actually downgrade Equinix to a sector perform rating earlier this year, basically warning that the stock might be pretty overvalued relative to its fair value.
And valuation isn't even the only risk here. We have to look at the immense execution risk of rolling out over 100 projects in the middle of severe power constraints, rising construction costs, and a real shortage of electricians. They're planning today for capacity that won't even be delivered until 2028 or 2029, and let's face it, a lot can go wrong in that window. Furthermore, there's a looming threat of competition from their very own biggest clients, the hyperscalers, who are increasingly just building their own data centers. Oh, and finally, some recent insider selling suggests that even folks inside the company are deciding to take some profits off the table at these high valuations.
Section 6. The final verdict.
So, the pick and shovel trade right now is defined by this striking duality. On the bull side, you've got the undeniable reality of accelerating AI demand. A company hitting absolute record interconnection numbers, raising their multi-year guidance, and enjoying near unanimous support from Wall Street. It's a great story. But the bear case? It's equally grounded in reality. You are paying a massive premium valuation for a company that has to execute flawlessly on over 100 incredibly complex, resource-heavy projects over the next 5 years, all while trying to fend off competition from trillion-dollar tech giants.
Which brings us to the ultimate question you have to ask yourself as you're processing all this data. Look, Equinix is a fantastic company riding a tremendous multi-decade tailwind in AI, but a whole lot of that optimism is already baked right into the stock price. So, as you look at the fundamental plumbing of the entire AI revolution, is owning this foundational infrastructure worth paying the price of perfection? I'll leave you to think on that. Thanks so much for joining me for this explainer, and as always, keep questioning the data.